Hello, this is Ernest Osias, Director of Market Analytics with Woodall Risk Management. Thank you for joining us for our weekly technical overview of the grain markets. Before we begin, a brief moment to look at our market disclosure. This is a solicitation, and there is substantial risk of loss in trading futures and futures options. Past performance is not necessarily indicative of future results. Thanks once again for joining us for our weekly installment of the Technical Market Overview. We'll go ahead and begin. The December WASDE report has come and gone, and as expected, it was uneventful. The markets are trading consistent with expectations, and as we can see on the chart right now, for this March corn contract, we're up against resistance, and the last few times that we've actually touched resistance here, the market has responded by coming down off of these resistance levels. The most recent touch, you'll notice that the market came in and only moved about halfway down, did not make it all the way down to 343 3/4, and instead found support at this 90-degree mark at 353 and has since moved up from there. What that tells us is the market has the potential then to actually make its way up and finally make a break or make a test up to the 372 level in the coming weeks. We're only about a week and a half away from Christmas, and so the markets should continue to move sideways to slightly up over the next couple weeks. The next 2 trading days should be very important, especially if we're able to close out the week closing above 369. That would be pretty bullish for this market and potentially a breakout trade, having been that it would have crossed these previous major resistance highs from back in October. And so in doing so, the market then could find itself slowly creeping its way up from these levels here, but that 369 level is going to be very key in the coming weeks. Jan Beans bumped its head up against our 180-degree mark, which was at 1050 half. And upon doing so, the market has been trending a little bit down from there, although it's been able to find support at our 90-degree mark at 1018 1/4. So from here, the market's going to potentially oscillate back and forth, but upon making a clean break through 1018, we could very well see a market that makes its way down to test 986 3/4. So these 3 levels, 1050 half, 1018 1/4, and 986 3/4, are going to be very key for this market, and this is where we anticipate the market oscillating over the coming weeks. This red 1x1 upward sloping trend line looks to play an important role in determining the speed of this market and the potential to show us the next key level of resistance. What we would be looking for here is for this market to continue to trade down into this trend line, and upon hitting it to perhaps start to move up the trend line, and that would give us a vision of the actual slope of the movement to the upside if this market's able to latch onto this well. Additionally, in terms of time factors, the next important pivot point that we're looking at is on the December 29 timeline, which is marked off on this brown vertical line. Once the market moves either down into this timeline or up into this timeline, we would not be surprised to see a minor or a major change of trend upon reaching that time factor. Lastly, we do have the level down near that number at 989, and so that does coincide with the previous levels that we were looking at just a moment ago. And so for now, the key thing that we would be looking for would be the time factor of December 29, as well as whether or not this 1x1 timing angle upside sloping line will give us some form of indication as to where this downward leg may pause and then begin to trace its way back up again. The March beans contract is approaching being oversold, and that indicator is in conjunction with a 50% retracement level at 1028 3/4. And so what we could see here is if the stochastic is able to turn up and the market comes into support at either 1028 3/4 or even as low as 1018 1/4, and then turns back up from there, that would coincide with finding good support and the market returning back up after being in an oversold position. And so as we can see from the March contract as well as the January contract, the sideways to up bias that we've been forecasting continues to hold up well, and we're simply in the midst of a pullback after the market hit up against very good resistance over the last week or so. Resistance last week was right up against our horizontal volatility-based resistance zone. And then on Monday, we can see resistance hit up against our timing angle, our 1x1 angle, before the market headed back down again. What we can see here is the potential for the market actually to trace down this angle on its way down. But if it's able to find some strength and bounce, since as mentioned before, it is oversold or at least approaching there, it could trace down just for a few more bars before heading back up, and then perhaps trace along this timing angle and then find a potential turn near that December 29 timeline as before. The make or break region that we identified last week is holding up very well. So that 395.25 to 386 area for the market held up. The market came in and touched it just once over the last week and a half. It breached it and then turned right back up from there and continued higher. And as we can see here, the market has now regained the previous key low near 411 and is now back above that area and is currently testing the 1x1 angle upward. And this is where we're finding some good resistance potentially. Now, we've been up over the last 5 to 7 trading days, and so a pause would not be a surprise, although I do like the strength that we're seeing right now for this week contract, and it could very well continue to trace its way up to its next timeline, which is about mid to late December. Now that we are well beyond the make or break region, the current price level now to keep on our radar is 411.25. And as long as we're able to hold above 411.25 through the balance of this week, would not come as a surprise to see a test of 429.75 by the end of the month. 2 standard deviations below the point of control rests at 411.5, which reiterates that 411.25 level we talked about as being the key level for this week that we would like to see the market hold for the balance of the week. As you can see, as the market made its low off of that key region that we spoke about, it bounced up, came in, made a higher low at 402, which was another key area where the market needed to touch. But now that the market has breached and touched that area, it is now free to potentially move ahead. And we're working our way on a vertical basis to mid-month, which is where a potential market turn opportunity rests. So in all likelihood, what we would be looking for here is for wheat to continue to creep sideways to up until the middle of the month, and to see a pullback perhaps going into Christmas or shortly after the Christmas holiday, and then towards the end of the year to turn back up again after making a subsequent higher low. As far as crude oil is concerned, the advance off of the November 14 low appears to be a very significant one. What we have in this move up, that actually moved all the way up through our key resistance at 55, and we're looking for a minimum price objective of about 55.70 to 56. The market moved up and did exactly just that over the last 2 days as it gapped up on Monday in the overnight session, moved all the way up to our key resistance area and has since turned back down. But of particular note is the 5-wave sequence that we're seeing inside of this initial impulse, where we have wave 1, 2, 3, 4, and now terminating on Friday is wave 5. If we take this swing from this low up to the high and look at a retracement swing, we're looking at about 38% retracement sitting at 51.75 and a 61.8% retracement sitting at 48.98. If this market pulls back from here and holds inside of this area between 51.75 and 48.98, what we would be looking at then is leg 2 of a potential impulse move, and once this second leg terminates, we can expect to see a move in this length at a minimum from where it pauses and continues back up again. And so as this market makes this move, this current correction is going to be very key, especially since mid to late December, we're looking to see whether or not this pullback ends up pausing somewhere in that neighborhood of timeline. If it doesn't pause here, then we're looking at early January potentially, and for the market to just kind of move sideways to down from this area here before it is able to turn back up again. But once again, that key area of support that we would be looking for is if about 49 is able to hold, then we should look for a move at a minimum that travels this exact same distance on its way back up. Thank you so much for joining us once again for our market update. I look forward to touching base with you again next week.